This conference will now be recorded.
Good morning, ladies and gentlemen. This is Clueless Day Trading Frank. It's approximately 10:41 a.m. on a cloudy morning here on the Jersey City waterfront overlooking New York City. Welcome. It is September 8, 2019. This is a free complimentary ACS advanced coaching session for our members and free trial subscribers. We have a terrific guest list. We have Mike out there in the Midwest. We have Patrick visiting a member for a couple of months from Switzerland. And we have Serge from beautiful Quebec City in Canada. So we have quite the international crowd, and welcome. Full disclosure, this is purely for financial education, not for any solicitation or advice. And we shall begin. So what I want to do with today's session is, first of all, open up the forum by asking you all to field a couple of questions so I can address those. And in the meantime, I will go through and set up a few charts as you are formulating your questions. Keep in mind that we will have our weekly Sunday night webinars, which will begin approximately around 9 p.m. or 8:30 p.m. Eastern Standard Time. Those are extremely important because they will lay out the roadmap, or what we call the tactical roadmap, for the week ahead going into September. And I am not going to go into the forecasting part of all that. I will leave that for tonight. So very important that all of you attend that because everything that we have spoken about pretty much to a high degree of accuracy have come correct. And you can clearly see what the markets and those individual stock alerts that we do have come to fruition. So, Patrick, you being first time here on one of these webinars, please go ahead and ask a question that I can address. Something that
Okay, yeah, well, I have an overall question, if
Yes.
this is all right. It's like, sometimes it's happening we're very active with the option tradings, right? We have quite some trades going on, right?
Yes, sir.
An overall question would be, sometimes if you just got a loser, let's say, after next day, after 2 days, it's down to 25 and it's just bleeding out. Would you have or know like a rule or something, just a simple thing when to get rid of them? Because sometimes we have 10 trades, 4 of them are successful, but I have another 6 ones, they're just bleeding out and eating up all the winnings I make with the other 4s.
Yes, that's a very, very good question, and let me address that question directly. And that is something that falls into the category of trade management.
Yes.
And there is no 1 + 1 = 2 type of easy answer. Just the way the markets are not 1 + 1 = 2. So let me just get my writing board, which will allow me to write a few basic rules that I follow, so that net gains can be kept in between the losers, and obviously the winners have to be higher. The numbers have to be higher than that. So let me just begin with that. 1 second, please. I'm just setting up the on-screen writing board. Okay, I think we're good to go. All right. So the question that was asked is basically a trade management question. You can see the writing, guys.
Okay.
Can everyone see my writing that I'm writing on the screen?
Yes.
Okay,
yes, sir.
excellent. Okay. Like they say in in poker and Texas, what's it called? Texas Hold'em? When to fold. Okay. All right. So let me just write out some basic rules. Number one, you should have your. Okay, let me first basically characterize the general question, and then I'm going to get into specific. Is that good, Patrick?
Yes, absolutely.
Okay. So bottom line is everyone has their own risk level. Everyone has own risk level, how much risk they can tolerate. So that's number one. Number two, these are the general things. Market volatility can turn around trades within a few days. So these are the general things that I'm writing down just to explain, and then I'm going to get into the specifics. So what can be down can be up quite a bit. And there are numerous examples of that. And one of the biggest ones that I will highlight is Twitter, TWTR. That's number two. I'm running out of space. Okay. Number three, which is the most one of the most important part, position sizing. Number four, time value on the options, which is one of the most important things, which by now everyone should know, is how many days left for the options expiry. Number five, and I'm just giving you the general stuff. Number five is whether one is keeping short term, which is the day trading part, or whether somebody is looking on the swing time frames. So on my mind, these are, if anything else comes up, I'm going to obviously write it down. So these are some of the general picture that we have to deal with, period. Now, number six, which is the most important part, is to understand the volatility, which up and down, the volatility on that particular volatility on markets, which have extremely volatile. Now that we are broken out, obviously we are a little bit more, there's a bit more higher probability, as I've clearly shown, that the markets are possibly by this coming week are going to hit, at least retest the previous highs, but in between there's going to be a lot of zigzags. Volatility, understand the volatility in the markets, and most importantly, the charts on the individual stock, and that will help somebody maintain their position or get out. So those are the general picture. Now let me get into the specifics. Okay, here are the specifics, the basic rules, which everyone can alter to their own mental and position characteristics. Okay, the specifics. Number one, the general rule of the thumb is that if you are down, number one, depending on how much money, your position size, depending on the position size, how much you have put in that particular trade, whether you have a larger amount of money based on how much trading capital you're trading with, position sizing, the general rule of the thumb is 40 to 60% is your maximum risk parameters or stops. Okay, Now, here is the only problem that we run into. Options are extremely volatile, any type of options. So on a certain day, you could be based on your initial entry price and the markets open down, say, for example, on Monday, last Monday. Sorry, we were closed last Monday, Labor Day. We are talking a Tuesday. Markets were down substantially, and then they turned around, as we had clearly walked people through, and it just went, and it was substantial, huge rally that culminated into touching those levels on the high end by Friday. So so depending on your entry, let's say you have a position that you took on Friday based on the alerts, you could be down the 40% level right away on Tuesday, which was the first trading day of the month. However, as the days progressed, this is on Tuesday. So as the days progressed, that 40% loss by Friday literally could be 100 or more percent gain. So first and foremost, if you want to look at the basic level, because options trading, just like stock trading too, but options trading moves faster, you have to keep in mind that this is a basic rule of the thumb on the 40 to 60% move. Now, if it's a swing trade, meaning that you're intending to hold it for a couple of weeks, first and foremost, my alerts are suggestions. So somebody can say, okay, I like that chart. Say, for example, NVIDIA, which has been a solid winner on certain days. It's been down $3, $4, $5. But if you look at the overall chart, the stock still has room to move higher. However, markets opening down, whatever the case may be, Tuesday is a prime example. NVIDIA could very easily, it opened down $4+ So the point is that you've got to focus on whether you have to first decide in your mind whether it's a swing trade, which most of the times I put down swing trade, meaning I'm intending to hold it for more than 1 week or 2 weeks, or it is a short-term trade, which I'm intending to close out on that within a matter of 1 to 2 days. So a day trade doesn't have to be just during the day. It is basically, I would say, a 1 to 3 days. So one of the points I also want to make regarding individual alerts, we are basically catering here at Clueless Trading. I am trying to we have all types of traders. We have very active traders. We have active, and then we have non-active traders who like to sit on positions for a larger period of time. So a lot of the alerts, which I'm presenting, Patrick, are for the benefit of all different types of traders. So so that becomes a little bit confusing. I understand that, but there's nothing I can do about that because I'm always looking for opportunities. So so basically, you don't have to necessarily, depending on your understanding of that particular chart, depending on the time frame, depending what type of stock it is, options that we're trading on that particular stock, you will have to kind of make an individual determination whether or not that is worth holding, whether it is worth, which is very, very important, dollar cost averaging, which is extremely important in these type of markets, which have been going on for years now, machine-driven markets, what we call algorithmic high-frequency trading. So dollar cost averaging is critical. So dollar cost averaging, in which most people understand, is basically you buy an option, let's say at $4, you're down to 2. The charts are still looking good, even though they are highly volatile. And volatility is something that we have to just live with. We have to understand it doesn't have to make us happy, but it certainly doesn't make me happy. But at the same time, that is the nature of technical markets. So you have to make a decision whether or not, if you had 2 calls here, whether or not you need to, whether you should add 2 more calls at 2, and your average cost at that point becomes 3. And in a matter of a couple of days, case in point, this past week, those options go to $9. It happens a lot. I can specify a big example. Amazon. So I mentioned the calls around $5. They went to 7 to 8 the following day. This was the past week. They dropped down to about 4 or less, and then by Thursday they were at 15, and then they went to $20+. I think they went higher. So going back to the basics, and your question is an excellent question for both new traders and for professional traders like ourselves, is general rule of the thumb. Depending on the money that you have, if you have a small amount of money on a particular position, it doesn't hurt that much to look at the screen and down 60%. However, if it is a larger amount of money and you like that particular company, you like that particular chart, I would follow the 40 to 60% rule. What I do, because I understand the volatility in the market can switch things around, case in point, almost every week. And this past week was a prime example of that. Big open down on Tuesday, and then a substantial rally. This was Tuesday, right there. You can see that. I have the chart on the back. So here we were on the 30th of August, which was, and the answer to your question hasn't finished. I'll be continuing with this. So the 30th of August was Friday. One second. I was just looking at the calendar on the other side. So the 30th of August was Friday. So this was Friday. Solid finish to the markets. This was the long weekend with Labor Day holiday. This is what futures did while US markets were closed. Then the futures basically on Friday opened up. Let me make sure I have the things correct. This was the second, 6:30 in the evening. This is Monday, 6:30 in the evening, when our markets were closed, but the futures markets were going. Markets opened down, bunch of points. I will, as I go on with answering your question, I will show you multiple charts that I put out there, calling these movements here rapid movements with a downward bias, but a more of a bottoming process. I called it volatility clusters. Volatility clusters on a technical basis is where a lot of program trading is happening, not humans, automated machines, buying and selling within a specific range. I expected, based on my knowledge and my experience, that this would result in a upward move. And one of the charts that I'm going to show you in a couple of minutes, and these all tie in with your how to manage options, because I rely on making a decision, not just because I'm down 40% or 50% on something, but whether or not, based on market and based on that particular stock, whether or not I have a chance to recoup and make substantial profits on that. And I made a determination based on the movements in the market, based on the background of what was going on with the news flow, based on a past pattern symmetry, which most of you will remember. I showed one of the, which I'll bring onto the screen in a second. I showed the same thing happened on June 3rd, where there was a lot of movement, volatility cluster, back and forth, and it resolved to the upside. That is exactly what happened on Wednesday and Thursday, where the markets just moved substantially higher. We'll look at that in a minute. Going back to, so that helps me make a determination whether I should completely get out of the loss position, or basically do the dollar cost averaging and sit tight and let the market flow. Remember, there is no guarantees, but it was a mathematical decision based on mathematical probability whether something would move. So most of these swing trades, whether it's Amazon, whether it's Twitter, whether it's Nvidia, and all those other types of companies, which are more trading type of stocks, not just sitting on them, but you can trade them, just the way Amazon did this move, and it's a prime example. Oh, I forgot to mention Apple. Apple is another prime example. Apple on Tuesday when we opened, we're down about $3 to $4 after being up nicely the following Friday. So I made a decision to basically stick with Apple, add more, and those paid out very, very nicely over the following day.
Yeah, absolutely. Frank, may I ask something in between?
Yes, of course you can, Patrick.
Okay, sorry, I don't want to interrupt you. It's just I completely understand that, but very specific, simple questions would be: you do not always, you do not in general announce when you sell on a loss.
Okay. Generally speaking, I do most of the trades. I'm showing where there are two aspects to that. So let me answer that question. Number one, the way the service is set up is not a ditto trading service. Ditto trading means that you are basically copying, and this is a question I've addressed many times before to a lot of members, and I'm glad you asked that again. We are not a ditto trading service. Now, what does that mean? That means you are not looking at my screen, which is showing all my positions, and I have multiple accounts, which trading accounts, one for different types, one for longer term trades, swing trades, one for shorter term trades, ones which are basically those are the two primary ones, one for shorter term trades, one for holding out the longer term trades. Now, being not a ditto trading service, it is not possible for me, it is not possible to show entry, certainly, to show every single exit, whether it's a let me finish, whether it's a winning trade or a losing trade. However, here is the answer. Here is what you need to do, and a lot of my members who have been with me for a while have adapted using their own skill sets to know what to do when on the exit side, because the hard part is the exit side. So not necessarily always the entry side. Entries are very good most of the times. And this is just normal across the board for any trader or investor. It is the exit side. Generally speaking, people sell early. I do too at times, depending on my position size, but I tend to hold on to at least a small position and add to it if I see it moving really hard. So here's the answer to your question. Almost every single trade of any consequence comes, every single trade alert, and this will answer a good portion of your question. Trade alert has a chart attached to it with very specific parameters. Even I put arrows and stuff, which honestly speaking, I just do it so that people can focus on that, and their eyeballs can go directly on those levels where one should be selling, one should be buying within those parameters. So that should be a roadmap as to if it's a total breakdown on that particular stock, if it's a total breakdown, or it's simply a minor pullback before the resumption of the trend higher. We are primarily long bias traders based on the climate in the market. About 2 weeks ago, I almost went full scale bearish when the markets were going through that intense volatility period. However, I kept my mental frame in check, and I basically went in there and kept my position sizes, as I posted many times, smaller, took profits earlier, and let the market show us what might happen. My predictive stuff went right. So here's the answer to your question. Being a non-ditto trading service, which is in my opinion, almost a illegal game, because I don't know, and this will answer part of your question, what trading capital somebody is trading with. So if somebody's trading with $2,000, what trading dollars? So if somebody's trading with $2,000, somebody's trading with $20,000, I have no idea. So bottom line is that if somebody is down $400 or somebody is down $4,000 or vice versa up, I don't know. So if I move around quite quickly. If I have 10 contracts or something, I will take profits on 6. I will leave 4. If that 4 moves down, depending on the market and the charts, then I will add more. Let's say I'll add 4 more. I'll have 8, and those I will sell as we move forward. So the reason I don't have exact, like, okay, I'm out of it. All right. The reason I don't do that, I say I'm completely out of it, but I'm only out of it or maybe half my positions. And I do put that, just so you know, if you look through my Twitter feed, you will find I do put down, I have sold 60% of the position, I've sold 80% of the position, and generally speaking, there are a much lower number of stocks which I am completely going to, I certainly take losses, but completely get out and completely leave the position. Now, here is what I wanted to answer. We do earnings trades, okay? So these earnings trades have a different characteristics. We call them ER trades, earnings report trades. So ER trades. So let's say I am recommending 6 earnings plays. Out of that, 3 of them go down, 1 is kind of flat, and then 2 just went through the roof. Now, out of the 3 that went down, and a prime example was Autodesk from the week previous. Autodesk was at $152. It plummeted down to $126 or $130 on earnings. By Friday, it had gone above $152 in 1 week, and I put that out. On that. So in this particular case, we call them reversal trades. So I try to look for reversals, which are a very tricky game, but the charts kind of show it, and especially if they are a powerful company like Autodesk, then they will generally tend to reverse. Now, this happens quite a bit on multiple stocks. Some of them take a week, some of them take 1 to 3 days, and some of them will, and some of them just won't reverse. They will stay there, and those are the ones, generally speaking, I will take a total loss. So
exactly,
let me finish my comment. Let me finish my comment. So when it comes to earnings trades, which are very different than swing trades and day trades, we would all, I generally, on the profit side, most of the options. So let's say, for example, a Walmart from a month ago. That was a fantastic earnings trade. You know, there were options from $2 went to $6. So bottom line is that the ones which collapse really hard, and I do small amounts on, because we call it a basket strategy. So I know that my risk is limited if the ones which blow up, and there have been cases on certain earnings trades that I've recommended 4 and 3 have completely blown up. So I understand that. That's part of the risk. So and then the ones that are blown up, out of that, maybe 1 over the next couple of days just turn around and go a lot higher. So my answer to that question is, when people have asked me this, is that earnings trades are different. If you're down on one of them and you have an option on a basket, let's say of $1.60, a lot of them are very cheap, and they are down to 20 cents, what I do is I'm like, okay, I already lost that money on those few calls that I brought there. Or in the case of basket trades, in many cases, I will just buy 1 call. And if it's $1.60, maybe I'll buy a couple. But if the options are $6, I will buy 1. I'll buy 1. So I know that if this one goes down to 20 cents, I've already lost the money. Okay, 20 cents means that 1 contract, let's say I had 1 contract here. So $160 went down to $20. So in that case, what I do is, regardless of the chart, of course I look at the chart, I will add on a bunch of the 20 cents to it and bring my cost down maybe to 80 cents. So if by any chance, and the markets do all kinds of funky stuff, because a lot of hedge funds, they trade. And a lot of hedge funds, they stock is up $15. All of a sudden, you see it dropping really hard. When the market opens, you're like, what's going on? Well, what's going on is the hedge fund is day trading. They want to basically take their profits, just completely flush out the individual trader who gets scared and says, sell, sell, sell. And then they will turn the stock around within the next 4 hours. This happens a lot. And these are things that happen in the market a lot because the hedge funds, many of them, are very active machine traders. So they will drop 100,000 shares when a stock is up $15. They will take their they will take their what do you call it? They'll drop 10,000 shares. So they will take their $150,000 with maybe $30,000 in profit, and then they will buy back in a couple of hours. So what I do is I watch very carefully for volume. I look at the 15-minute charts. I look to see whether or not it's a pattern of reversal. And then if I feel comfortable, I go ahead and post that for my members. So coming back to your original question, in the case of earnings trades, if one of them blows out, blows out. And if it's going to be a reversal trade and it gets really cheap, and it all depends on the price, then I will say, okay, let me add, I had one here, let me add 9 more here, which is $180. So my cost will come down to maybe 40 cents. And then if it goes, I make a lot of money. And so that's one part of the question. The answer. The other question answer, and I know you have another question. The other part of the question is regarding general rule. Like I said, 40 to 60%. You have to watch whether or not you have to watch the volatility charts, meaning whether or not it's worth the hold, whether you should cost average, or whether you should completely let it go. One last thing before your next question is the characteristics of what type of stocks. If it's an Apple, if it's an Nvidia, if it's a Facebook, all these stocks that we trade. If it's a Facebook, whether it's a Google, I'm giving you the bigger names. Whether it's a Twitter, these ones generally flow with the flows of the market. Okay?
Exactly.
So these ones have a different characteristics. The ones which have very weird characteristics, and the charts, I try to structure them as much as possible. I call them more strange type of movements, are biotechs. Okay, biotechs generally do not follow the flow of the market. Now, within the biotech sectors, the stable ones, which I've explained many times on my videos, are the HMOs, UNH. These are stable stocks. They are not dependent on China. They are more recession-proof. UNH, Humana, the health management organizations. Humana, another one that we trade in the basket is Anthem Health. These are more of the stable ones. They're not biotech. They are big hospital management companies, insurance companies, so very important. But the biotechs are the more difficult ones. They can pay you big time, or sometimes all of a sudden they'll be down $10. I am still down, even though a dollar cost average on a bunch of biotech positions. However, the calls being cheaper, and I have time left, September 20th, October 18th, lots of time left. I believe that they will be, and I know the characteristics of these companies. I'm not just randomly buying them. Even though I don't post research on, which is too much, on my service, I am looking behind the cover and understanding why these companies, whether it's worth holding them, what's their potential. I look at the research reports. I look at their upcoming conferences, presentation, things like that. But primarily, I show the chart and say, okay, go ahead and buy this and sit on them. So the biotechs are more of the strange ones, which move on that. Lastly, if somebody wants to play the market clean, what's the clean version of playing the market? The clean version of playing the market, as I've explained, are the SPY, the QQQ. I'm not trading the IWM for the last couple of months. You can play the DIA, which is the Dow Jones Industrial Average, diamonds, or you can play the semiconductor index, which is the SMH. That's the clean way of playing the market. Those are more predictable. Why? Even though they move around fast. These will be down 40% in 10 minutes, but they're easier to read because you have these in front of you. because you have these in front of you.
Yeah.
1 second. Go ahead with your next question.
It's just a little bit more. So in general, it's just like together. I know it's great answer. Thank you very much. In general, for me, it was interesting to hear that the selling I have to manage more by myself. You know, as a very beginner or as a new member. In the beginning, I was waiting for you to say sell those. You know, YY was a good example. YY was even up, and then it started bleeding, going down again.
And exactly. No, go ahead. That's a good example you brought up. YY. YY was primarily an earnings trade, if you remember, right?
Yeah.
It was the earnings trade, and it was also recommended. It was an earnings trade. It's a Chinese company. It's a Chinese company. And generally speaking, with the earnings trade, on most of them, you need to keep in mind that if they're up a lot, just sell it. Period. You know, just sell it, because the key is that it is not something, if you notice, other than those maybe 1 or 2 day instance, I don't trade YY, but I did that because of the earnings trade. Now, the ones that, what you have to understand, and which is a very good point that you brought out, the most important things that I have to deal with, I still am adapting, and every trader, amateur or professional, should be doing, is trying to learn how to manage trades in these extremely volatile markets. Let me give you a ray of hope and encouragement. Professional traders who have been trading for 30 years, 40 years, people who taught me how to look at the markets, they can't even trade these markets. And I have posted numerous articles. I have talked about it in the webinars. Almost $7 trillion plus sitting on the sidelines. They are so scared of volatility, so scared of what might happen. The point is, what I'm trying to say is, the trade management part, because of the volatility, is so difficult for so many, and we try to manage that within the framework of these structured charts, that even they can't handle it. So somebody new needs to basically, somebody new has a advantage. What's their advantage? They're new, so they are learning the structural, tactical way of trading of trading the markets. They're not looking at the old-fashioned way of trading the markets, which doesn't work anymore. Oh, this is the chart I was looking for. So so what I would say is, I constantly find the most difficult aspect of my professional trading career is the trade management part. I have, but on the trade management part, it is both on the upside and the downside. Why? Because sometimes I sell too early, don't have that much of a position, or get out, and I see that same thing soar 600%. It's happened to me. It happens to me, I would say not a lot, but it certainly happens to me, and it doesn't feel good. So the second point is, on the downside. On the downside, generally speaking, what I try to do is, sometimes I'm getting out of an earnings trade too fast, too quick, because I'm down 60% on it. I'm like, that's it, I'm getting out, and I see it, and this has happened a lot. And then I see it, and not just an earnings trade, generally speaking too, I see it soar in the next day or two. What I try to do, I try to jump in as quickly as possible, but sometimes the markets are moving so fast that I generally, I'm just like, okay, fine, let it go. So trade management, people have asked me, so what do I do? So here is a simple answer to it. One of the key things that I've helped many members on, and there are multiple videos of those things, some of them I have put out with their permission, what we call ACS sessions. I spend a lot of time working with members, especially the newer ones, who basically want to sharpen their skills so they can manage trades better. Managing trades better, Patrick, does not come naturally. The natural inclination is panic or euphoria, to be too happy because things are moving higher big time, or just panicking and selling. Both are equally dangerous. So bottom line is, one of the suggestions that I can give you, I mean, certainly work with you at your convenient time, is you need to work on the ACS sessions, one-to-one or in a group session. and the enrollment for that is directly on the website under members area. More importantly, if you go through my Google YouTube channel and go on the new member intro video, and this is one thing I would suggest to you immediately.
I did that. Yeah.
Oh, you did that? Okay. So
yes, cool.
What I have found, which has worked really well, and there are lots of great testimonials out there, not to make me happy, but it's for other people to see, that if somebody works with me one-to-one or in a small group session, we can go into the specifics of the trade management part and discuss individual trades, which I obviously can't do during the trading hours, and that would be extremely helpful to you. So figure out your schedule, get in touch with me, and we'll figure that out.
Okay.
But trade management is extremely hard. Why?
Yeah.
Because of the volatility in the market. If we did not have volatility, trade management would be easier. We just buy something, and most of the times on these name brand stocks that we're trading in different categories, they get there.
Yeah.
And so, but in order to get there, they will do whatever it takes. The machines will do whatever it takes to get you out of that position. So on that note, let me explain one thing to you. So this was 1 second, August 27th. This was June 3rd. What was June 3rd? June 3rd. This was September 3rd. Okay, yeah, September 3rd, and this was August 25th. So here is a key point I want everyone to listen to because of the great question that Patrick is asking. I pinpointed this level, that's why I shaded it, and on my Twitter feed, I actually had big captions here saying pattern symmetry, what we call volatility cluster. I'm going to call it vol cluster. That's vol is not volume, it's volatility cluster. And I wrote that down clearly. And my advanced coaching students knew exactly what I was talking about because we have discussed these matters. It's not the first time it's happened, where there's a lot of activity within a range, but with a downward bias. I noticed on the end of what was going on in September 3rd, which was Tuesday, this past Tuesday, that the same stuff was going on. Now, was I completely sure? Absolutely not. But as somebody who, and this is thing I teach extremely well, what we call pattern recognition. Let's call it PR. Pattern recognition. Sorry, let me just write that down. So let's call it PR, not public relations, but pattern recognition. I recognized this pattern and looked at many other things, obviously, but other charts. And I said, you know, the good probability that this is going to happen. And that is exactly what happened. Now, am I calling this was a monster move? Because if you listen to my Sunday webinar from last Sunday, Patrick, you will know exactly what I said and what was the higher probability. And generally speaking, forecasting is very tough business, especially in this type of market. But this was like as accurate as a forecast. Of course, luck is involved, but there's a lot of factors that go into producing that luck, and it worked. So bottom line is, from a option standpoint, Patrick, things that on Friday and they were down based on what I was looking at on the charts, I had, and I explained repeatedly, there was a good probability of this happening. Something bought at 4 goes to 1 or 2. Just giving you an extreme example, I will be loading up, not loading up, but I'm adding, and those $2 calls, the cost basis, let's say, has come down to now 3. By the time the week ended, they would be at 10 or 8. So what helped me maintain my position and add to my positions on especially the bigger cap stocks, and I was very selective on the ones that I was recommending. I wasn't just saying just buy everything. Or the SPY, it helped me maintain my position, helped me basically do what was necessary and make very decent profits along the way. Now, along the way, we we surged, we fell. However, the charts are very clear what the overall trend is. So understanding the charts is critical, which will help you maintain your position or take a loss and maintain more of your profits.
Yeah, the 1 to 2 doesn't mean you had down there 1 to 2 position and up there 8 to 10 position. There wasn't the amount of position you were having, right?
No, you read it wrong. Okay. I meant that was price. So okay. if I have a option at $4 and it went to 1 to 2, these are not positions, the actual option price. and then I'm adding it, bringing my cost down. You understand dollar cost averaging, which means
Sure, absolutely.
Yeah. So bring it down to, let's say, 3. So by the time the week ended, and along the way, of course, I took profits and moved my strikes higher. That's another thing. Is as things are moving forward, you have an option expiring. Let's say you bought an option with a strike price of 100, and it is now at 105. You want to sell the 100, and I do mention that quite a bit. You roll over, you buy the ones which are 105, you keep most of your profits from the ones in the 100, and then if it moves up to 110, as it's moving towards 110, Nvidia is a prime example of this, even though the prices are higher on that. You basically sell and you buy the cheaper ones going forward.
Yeah.
So most of your profit stays in your pocket, and you have more money for other position. So $3 goes to 8. This is not number of positions. I'm talking about the actual prices. Now,
okay, rollover doesn't mean you take the whole profit and reinvest it. You take part of the profit and reinvest it.
Generally speaking, when I say sell a certain strike, that means sell the whole lot because you're up nicely. And on the SPYs, this happens a lot. Gap opens, market gap open, 10, 15 points, sell it, sit back a bit. That's what I general rule of the thumb. I sit back a bit, watch the market for the next 15, 20, 30 minutes, and then look to see whether the basing. There are many different signals that come out of the market, which I teach on the advanced coaching sessions. Anyone, I make it quite simple. Anyone can read those, and especially when I put out my charts, they can read them. So it means that generally speaking, on a rollover, that's a good question, and everyone will benefit from Pat's questions. Rollover generally means sell. Yeah, I generally sell 100% of the position out of it, let's say the SPY 290, which was one of our original ones, and now it's at 292. I will sell that. Okay, I will sell that, and depending on the market, I will at that point I'm rolling over into the 294s, which I did, 294 calls strike price. So yes, I would sell that. I would take part of the profit, or whatever, part of that capital that I released. So let's say somebody had $1,000 here, they're up to $2,000. Take I don't know. I mean, it's depending on, and that's what trade management comes about. It's completely up to them. Depending on the force of the market, I will initiate a position, $500. That's 25% of the overall capital that I released, and then add to it if it's moving forward. So yes, rollover in most cases means selling that out and going into the higher strike because the markets are doing these surges. Yes.
Okay. Great.
Now, in some cases, Patrick, you will see, time permitting, I try to put it, I will say sold 60 or 80% of my position. I do say that. Okay. So what does that mean? I am suggesting, I'm not saying you have to do that. If somebody has one contract, you can break it up into 8 pieces, right? They need to sell the whole thing. If somebody has 2 contracts, they can't sell 60% of that. They have to sell 50% of that. In other words, they have to sell 1. So all I'm saying, simply suggesting that I'm out of most of that position.
Yeah.
So anytime I'm saying sold, I never say, oh, sold 20%. I'm either selling 40%, 60%, 80%. In other words, I'm getting out of that position and trying to re-enter a higher strike or sitting back.
Okay. May I make one last question for an actual position? It's American Airlines, you know?
Yes.
We loaded up on that one a couple times, you know, because there always came in dynamics in, but it's so I'm pretty big in for my relationship, pretty big in that.
Okay,
but it feels like it's a loser.
Let me stop you. Let me stop you. American Airlines is certainly not a loser. American Airlines, we are talking about lottos. Okay, we are talking about things which are in the 10 cent to 20 cent range, correct?
Yeah.
Exactly. I'm going to pull up American. If you look at the chart on American Airlines, those 10 cents to 50 cents on certain days, they actually jettisoned up to about 18 cents. What is your average cost on it? Without telling us your position, what is your average cost on American Airlines?
I think I'm in between, in the middle, or about 14 cents, I guess. I started in the beginning in the very lowest, and I added up the 2 times you were.
Okay, so your average cost is 14 cents, right?
Yeah.
I will put money down. Well, that's what I do all day long, right? You're going to be a big winner, American Airlines, if you're a swing trader on that stock. If you're flipping out because the stock is moving between 15 cents and 17 cents or 13 cents, you're going to be a loser. But if you hold on to your position, okay, and you look at that, and I will discuss American Airlines tonight on the thing. Let me see if I don't have my Think or Swim open right now. However, I will pull it up here and show you. American Airlines, honestly speaking, and you have to buy time. September 20th, October 18th. Go out in time. Go out in time, because this chart is so powerful in the sense that you are at the early stages of the move towards. It's already moved up a bit since I recommended it. For stock traders, they've already moved up. Remember, we bought the options a bit out of the money. So the stock has to move over 28, 29 in order for these options to basically go into the 50 cent, 75 cent range, which is where the big money comes in. Okay. So just keep that in mind. So let me pull up the case of American Airlines.
Okay, and I'm gonna keep the 20 September as well. I'm not gonna buy more time selling those and roll over to the 18th of October.
Let me just bring up the chart on American Airlines. I still have a substantial position. I had a large position, and I took about 25-30% profits when it surged a bit, put it back, re-added it back. 1 second, where is the thing? Let's call AAL. 9-cent Twitter calls, just to give you an example, this options world is such a different world, went to $1, almost $1.30 on Friday. And one of our newer members who plays with these very cheap options wrote to me, well, how am I supposed to make money? This was on Tuesday, right? On Tuesday, and he had a small amount but still, he's learning how to do this. And I said, you know what? Just take a deep breath, sit back, because I was already starting to see the charts that we're going to have a surge going into the week, and I was feeling good about it. Or we're looking at the volatility cluster. I said, just sit back, add a few more at 9 cents. They went up more than 1,500%. He sold on the surge up, but I don't think he held towards that dollar range, which is fine. But it's taught a critical lesson, because every loss should be treated, and that's the way I look at it, as a learning lesson on how to trade, rather than, oh boy, I screwed up. No, you don't necessarily screw up unless you get too emotionally panicked. That's different. You don't necessarily screw up. But if you are a tactical trader willing to learn some of the technical basics, then then basically you need to be just try to, what was my chain of thought? I was talking about, so here was this gentleman who is a terrific new member who learned from that, I'm sure, because he looked at it and he's like, oh my God, this thing went from 9 cents. His average cost, I believe, was 14 cents. So even if he didn't add at 9 cents, thing went to $1.30 by Friday on Twitter. And so he basically was up, like I said, close to 900. He would be up 900%. That's a sick number. 900% on let's say $1,000, or 900% even on $100 plus 900%. You are basically making $1,000. So these type of things, I called it obscene type of moves happen a lot. But one has to understand the backdrop of whether those are the chances of that happening is good or bad. That's where you have to follow. That's where you look at the bigger picture, and then you follow along with your trade management. So here is American Airlines, my friend. Okay, so and this is a very simple chart that I'm showing. My more detailed charts you have obviously looked at. That's the reason why you bought it, correct? So I'm going to show you some basic charting on that. And we'll answer your question regarding the time um, that you need for this to happen. Is this it? 1 second. Take this out. So in the most simplistic terms, this is the way you look at this chart, and that's why you will be a substantial winner if you do the September 20s. And as we get closer, remember, this is for me a swing trade.
Yeah.
That
Yeah.
means it will last a couple of weeks. As we get closer to September 20th, which is basically, let's say, by next Monday, sir. Okay, if the stock is not moving by next Monday, I'll be talking about American Airlines because it's not a day trade for me, so I'm not going to be posting it every 2 minutes. But generally speaking, if the stock hasn't made a substantial move by next Monday, which is the 16th, then I will go ahead and add, depending on the chart, I will go ahead and add more of my October 18s, which I already have. So that's the answer to your question, because I want to buy time on this. Now, in its very simplistic terms, you don't need to be technical on this. This is the move on American Airlines. It has done that every single time. Might not get to the top. Okay, this was the breakdown. It has happened every single time. American Airlines, if I evaluate my trades from the last 3 years, this is one of our best cheap lotto trades on the swing trading side. Now, if it surges forward and goes up to 30, which is right around the corner, the only reasons the options didn't move on Friday because of this one little red candle, which is coming into this level here. This is your trading range. So the bottom line is that as long as you have time, you're going to make out like a bandit. Those 14-cent calls can probably go down to 7 cents for all I know. But as long as the charts and the time are in my favor, then I will win. Now, some people, based on my suggestion, also bought the 28 calls. So they're up on that. I think I might have. I'm not sure if I recommended the 28 calls, but those they're up nicely, and because the stock broke out over 28. But in order for the 30 calls, which are the extreme lottos, these are extreme lottos. These are like 15 cents, 20 cents. These are extreme lottos, we call them. As long as you have time and patience, you are going to hit this mark. That is, and you don't need to be a technical genius. You just look at this chart. If you have more time, as you get into the fall period, we are in fall, but the latter part, the stock should get to the 32, 34 range. So yes, this is certainly a swing winning trade based on what I can see. However, on the downside, if I see a breakdown where the chart direction changes, then obviously you want to get out of it and take whatever loss you need to do. However, that would only if you see a substantial turn in this very simple chart, but there is nothing. This is still on an uptrend. So that uptrend, I'm not saying is going to go all the way here. That uptrend simply means that we are going to get in this 30 plus range. Now, and the other stock that I will talk about this night tonight, and I've mentioned it quite a few times, is GameStop. So these are the cheap ones where you need to have time to sit back and you need to maybe cost average a bit, but more importantly, time is the issue, like the strike price. September 20th, as we get close to it, if there is no substantial movement in the stock and the stock is just doing that, in that case, October 18th will come into play in a big way because that's going to buy you another full month.
Okay, good, great.
Exactly.
Unfortunately, yeah. I cannot be at the late and the evening sessions because
no
then
problem.
we have 3 o'clock in the morning.
You can review it at your own time tomorrow.
Okay.
Yeah, absolutely. And do connect with me depending on your schedule. You let me know. I would certainly like to work with you on the ACS coaching stuff, which you will see dramatic. I have no doubt about that because I've done that with so many people over the past couple of years. Even though it takes a lot of my time, I find it to be exciting to see that people come back to me, a month later after they finish their sessions with me, and they're like, you know what, I'm getting this. I'm actually handling things better. And that's it. So you definitely let me know what works for you, sir.
Thank you very much, Frank, for your great expertise and the great work you're doing. Looking forward to
I always say
really appreciate it.
I truly appreciate your kind words. More importantly, it's a constant learning process, and it is frustrating, but at the same time, the rewards are pretty good. But like I said, for a newer trader, play with small amounts of money, but also it's a risk game. So also be a little bit more aggressive, especially when the markets are substantially lower and everyone's scared. And I'm basically saying, you know what? Add. You don't have to go crazy because this is where the big money's made. And again, if you look at the longer term chart, which you'll be reviewing tomorrow after tonight's thing, the market's still on an uptrend, but expect these type of moves. Unfortunately, we cannot. One tweet out of President Trump, one comment out of China, we can easily fall 200-300 points. American Airlines can go down $1 for no reason. But as long as the trend is on the upside, then I will hold on to that position. Otherwise, obviously, I will say, you know what? Like when this happened, I was truly not nervous. I truly thought, you know what? At this point, this market doesn't have hope. But then what happened? Then we got the good news out of China that they're coming, blah, blah, blah. Boom, see you later. So it's telling you that the market wants to go higher. Most people are not in the market right now, which means there's more fuel. And I've talked about this extensively. And now the media is picking up and they're putting out the stories. There's so much money on the sidelines that they have to put it to work. Okay. So that itself is the fuel that the market needs, and it doesn't have to be anything else, because the money cannot sit on the sidelines forever. That's not what they're paid for. Wall Street's not paid to keep money on the sidelines, So that's why. Anyone else have? Pat, it's a pleasure, and I'll be talking to you more, and we'll figure out a convenient schedule for working with you. So that sounds good. Anyone else have any questions? I have to sign off. It's 11:42, Patrick. This has been fantastic. We have questions, and I look forward to, like I said, sharpening your skills on the trade management side and also on the chart reading side. I will see you all tonight at around 8:30, possibly 9 p.m. Watch out for the tweet notification, and God bless you all. Enjoy the day.
Thank you. You too. Bye, Frank.
Okay, bye. Thank you.
This conference will now be